Alrighty, folks, we are back with Mr. Dan Bird, BreakpointTrading.net. We are going to talk about the money show, what he learned, what is coming. We're going to talk about what's going on in the economy. What are the numbers telling us? And the election is almost here. The nonsense is almost over. And we can get on to celebrating the holidays and so much more.
Or maybe
Mr.
not.
Dan Bird. Yeah,
or maybe not.
I'm going to celebrate it just being over, man. I'm just going to celebrate it being over. So let's talk about the money show. What'd you get? What'd you learn?
We'll talk about that. Yeah, the money show was in Orlando this week. And the money show is an organization that kind of brings together different facets of investing. It includes real estate, silver, gold, stocks, of course, but other things too, like oil leases and even franchises.
Oh, wow.
So there's a lot of different things in that.
Is this a 1 day, 2 day? What is it?
It starts on Thursday and ends on Saturday.
Oh, wow. 3 day event.
Yeah. And there's one in Orlando is the annual one. I went to one in April in Miami, and they're going to have one in Sarasota in December.
All right. Well, they clearly like Florida.
That took a direct hit from the hurricane. They're actually based in Sarasota.
Okay. All right.
But there's lots of people you probably would recognize, like Katie Stockton, CNBC contributor that I follow. And there's some stock charts people were there. The guy from Stock Traders Almanac goes to the show quite often.
Nice.
So it's an opportunity to network. Interestingly, most of the people there seemed like they were retired and had money in different places, but were looking for ways to put money to work, kind of as a side thing.
Oh, so they're putting money to work as a entertainment or hobby.
Yeah, that's right, as their retirement hobby. Right, exactly.
Must be nice.
Yeah, so it's a lot of different levels of experience and knowledge, and that was really apparent in some of the individual sessions. Like I went to one with Katie. And a lot of the questions, Katie Stockton is a very technical analyst. Her company does technical analytics for major hedge funds. So she talks that language, and she forgets sometimes that the people in the audience may not know what she's talking about.
Yeah.
So I was helping her clarify some things. People were asking questions about her charts, and it kind of took her off guard because she just expected the people she normally talks to, she just expects them to understand it. Right. Right. So I was kind of helping her explaining it to the novices, what it all meant.
Very cool.
But it was really good. So the overarching theme, and I would say that the phrase of the week was uncertainty. That's what everybody talked about. And they talked about it in the context of this raging bull market.
Yeah, it's 2 years old now. It celebrated its second birthday.
Yeah. So everyone was talking about uncertainty, but they were talking about it in the sense that we're doing great. This has been a great year. It's been a bull market, but is it going to end? When's the shoe going to drop? So everyone's expecting it to end. And most of the speakers said, that's normal. But there's nothing in our indicators, and I'll show you some today. There's really nothing in our indicators that say that the market is going to roll over.
Yeah, it's really interesting. I love that word uncertainty because I don't know that I used that specifically, but I've been highlighting again as somebody who's been studying the consumer for 30 years that the consumer has gone on hiatus. It went on hiatus 4 to 6 weeks ago. Everybody's just waiting to get this election over. We're 2 short weeks, or about 2 weeks and 2 days out from it being over, hopefully. And we can finally get to the other side. I don't know what's on the other side. The other side.
By the way, you're not sharing yet, right? You're not sharing my screen yet, right?
Correct.
Okay. All right. I'll show you a slide.
Yeah.
That may change some of that. So that was part of the conversation as well. And a number of the presenters, including Katie, said there are no signs that the bull market is going to roll over. It's going to stop. Everything's still pointing higher. That could change naturally. Could change next week. Next week is historically one of the worst weeks of the year.
Oh, interesting.
The end of the week is usually when the market takes off, and that's when it took off 2 years ago. That's why it's the second anniversary. End of October is when it took off.
Yep.
Same thing happened last year. From July to October, the market was down. And then October 27th, it turned around and took off. This year has been reversed. This year it hasn't gone down, it's gone up instead.
Right.
So will the end of year be reversed too? Who knows?
Yeah.
However, here's the thing. Here is the fly in the ointment that everyone said. This is the qualifier that everyone was using in their presentations. Lots of uncertainty. No signs the bull market is going to end. Everyone is expecting it to, but it's not. It just keeps running. Earnings are coming out great. Bank earnings were good. Netflix broke out to all-time highs last week, and we've got more Magnificent Seven coming up.
Yep.
And they'll probably, in general, I think the earnings are still going to be good as well. Yeah. So earnings usually drives the market. So there's nothing that says it's going to roll over, except the election. Now, in most election years, and most years going back to 1952, there's only been 2 years that the market did not go up in the last 7 months of an election year.
Okay.
There have only been 2 years that did not happen. Can you guess which two they are?
Oh, I don't know.
So remember election year. So
yeah, so that would be what? So it's 24. So divide by 4. I don't know. Maybe 2008.
Yeah, that's one.
And then I'll go 2020.
Nope.
Oh, that was a V-shaped recovery. Yeah.
Right.
Oh, I don't know. What's the other one?
So 2008 was the great financial crisis.
It must have been 2000.
Yes, 2000. And why was that in 2000?
Oh, that was the .com blow up.
No.
No? Okay. What was
.com blow up happened after that.
Oh, really? What was 2000?
Because the election was undecided.
Oh, was that the Al Gore, the hanging Chad?
Yeah, that's right.
Nonsense?
Bush Gore. Yeah. The election was not decided until
for like
almost
37 days. Yeah, it was a long time.
Yeah, all the way to the end of December. The election was not decided.
Yeah, Supreme Court.
So that is the fly in the ointment.
All right. So, okay. So basically what I think you're telling me is we want a clear winner is a good thing.
Yes, correct.
Okay. That's
either
reasonable.
way, it doesn't matter who.
Yeah, it doesn't matter either way. Clear winner.
But yes, a clear winner. If there is not a clear winner, if some of these states like Wisconsin, Pennsylvania, Michigan, if they're on the edge and they say we have to go back and count the vote, we've got to do it manually. It's so close. We have to, go back and make sure and count things. And then, there's lawsuits and everything else, like what happened in 2000.
Right.
Then that is what could cause the market to go down.
All right.
Remember
let's all hope for a clear and decisive winner.
Right. Only 2 years in 74 years.
Right.
That the market has gone down. One was the great financial crisis. The other one was the undecided election in 2000.
Al Gore and Bush. Very, very cool.
So
let's get into the charts.
Yeah.
Let's get into the charts. I will change screens. There you go. We're changing.
Okay, good. Now, let's see. I wonder if, do you know how I can change my view?
I can change it.
To my slides instead?
I don't, I only have one thing that's sharing. So,
okay. All right. Well, I was going to show you a slide that showed what I just told you about those 2 years. So that's fine. I told you about it anyway, but it just would have been visual. So let me go back to my website, and you've got it up there on the screen, and now I'm sharing it, which hopefully everyone can see.
They can.
By the way, when I had my PowerPoint up, could you see that on your shared screen? No? So it's only this. All right. First, one thing I added to the homepage, and the homepage is available to everybody. You don't need a subscription. There's some quick charts right here. We'll look at some of those, but I also added this market bias chart. So this is something that I created, and I've shown it before. It's basically, there's a market bias tab here that It's all of these different components of the market: indexes, sectors, industry groups, relative charts, commodities,
Wow.
metals, currencies, right? All these things over here. And it ranks them based on short term, medium term, and long term whenever they change. So if it changes that day, so the ones that are highlighted here changed on Friday, and I update this every day. So these changed on Friday. And then there's basically a running total of all of these. And the colors over here, green, yellow, and red, just mean comparing it to yesterday and a week ago. So if it's higher than yesterday and higher than a week ago, it gets a green.
Got it.
If it's lower than yesterday and lower than a week ago, it gets a red. If one of those are different, it gets a yellow or neutral. Okay. So I've got short term, medium term, long term, and then I have an overall percentage for all of this, for everything that's over here, an overall percentage. You can kind of see just by the colors what the market's doing. You can see when it's starting to go up, when it's starting to go down. All right. But this chart over here basically charts this, charts these things over here. So the one below is the orange is short term, gray is medium term, yellow is long term. You can see the short term now is rolling over. You can see where it rolled over last time, back here in August, when the market went down in September. So think of this as a short to medium term view.
Okay.
All right. So short term usually rolls first, either goes up or down first. Medium term follows, and then long term kind of stays static for quite a long time.
Okay.
All right. So you can see the short term has already started to roll over. Medium term is beginning, and this is the overall view right there. So that's what I have now put on the home page.
Nice. That's very nice.
So you don't get the context of it by looking at all the individual pieces. And if you want to trade something, you don't have the ability to see when something changes that day. So if it changes from bear to bull, like lithium did.
Okay.
So when lithium down here changed from bear to bull, right here, here's lithium. By the way, you can actually download this Excel file. So you get the same thing, but it's much clearer. It's in Excel, and all these links work as well.
Right. Nice.
But it's also on the left over here too. So if we look at lithium, when lithium on the short term changed from bear to bull, was right way back here. And look what happened. It changed right here where the pink crossed the blue, changed way back here and went sideways for about a week. And then it took off.
Yep.
So if you were watching that little chart and you saw that thing highlighted, changing from red to green, and you were interested in lithium, then you could click on the chart and say, oh, well, it looks like lithium might be getting ready to take off. You could have got in down here at 37 and it ran up to 49. Right. So that's the value of that.
Okay.
That's the value of this whole thing. You can see all these things change, the day that they changed. Usually after the market closes is when all this gets updated. But the important thing is the market right now looks like it's beginning to start to roll over. So that this could continue lower, or it could start back up and just go sideways like it's been for a couple of months now.
Right. It's pretty interesting. I when I look back over the last couple of weeks, the 10-year note is broken above 4 and stayed there. Mortgage rates have popped from 6.1 to 6.6. Bitcoin is, I haven't checked this morning, but suddenly 68,000 or something, within a whisker if it's all-time high of 73. Gold's continuing to hit. Silver just popped. It's weird what's going on.
Well, it's not really. I mean, Bitcoin, I just showed you Bitcoin. It's not at the all-time high. That's way up here, this blue line.
Yeah, 73.
But it has broken this downtrend line.
Yeah.
So it's been in a downtrend for 6 months. And it has broken that downtrend line. So that implies that it could continue higher. Gold also, gold usually is something that people get in when there's uncertainty. Right?
No, to me, again, I think Bitcoin is a risk on asset and gold is a risk off asset.
Yes.
right?
Bitcoin,
But-
I don't know about Bitcoin these days.
well, it
Bitcoin
is
used
the
to be that
sport
way.
that
It used to be a risk
yeah.
on,
Okay,
and then it sort of was correlated with the market,
you're right.
and then then it became uncorrelated with the market. It was going
Okay,
down even as the market was going up.
right.
There were some comments at the Money Show about Bitcoin, and people were saying that a lot of the big players that made all of their money in the early days of Bitcoin have basically sold most of their position. They still have some.
Sure.
They sold most of their position, and they're making their money now on teaching people how to buy Bitcoin.
Ah, they're selling courses or all that. That's funny.
Exactly. So Bitcoin is a very interesting phenomenon. Be something to watch.
Yeah, I mean, maybe it's going through growth spurts or maturing.
Could be. Here's
I don't know.
here's the 10-year yield. I said a couple of weeks ago that I thought it might make it up here to the 200-day moving average, which is at about almost 4.2, just below 4.2, and it was heading higher and then pull back and then started heading higher and then pull back on Friday.
Right.
And you can see how bonds are inversely correlated.
Yep.
So
For sure.
this chart right here.
Can you take a look at silver? I don't think we've looked at silver. If we have ever, maybe just one other time. I heard it broke out recently.
Yeah. In fact, on that market bias chart, there is a silver component.
There it is.
Right here. We got gold and gold miners, silver and silver miners. So silver, yes, silver has broken out.
Yeah. Okay.
Definitely above the previous high. So it's broken through resistance. Absolutely. And if we go back, let's see, 3 years. That's 1 year. It's a 2-year chart. There's 2 years. So yeah, it's definitely breaking out. Silver probably is outpacing gold. Actually,
yeah,
right?
it's catching up. I think gold.
Yeah, catching up. Right.
Yeah.
Yep. So yeah, silver, gold, both of those. Gold is right here. Gold again is breaking out. Just a steady climb higher.
Yeah.
This is another one. If you were watching gold and you were watching this bias matrix every night,
Yep.
see gold down here, it would have changed from bear to bull right here. So that's when that was the alert to start to think about getting into gold. In fact, it changed short-term bull right there and medium-term bull just 3 days later. So that was a confirming signal. So right in this area right here, just by watching that little chart and watching those boxes every day,
right,
it told you now it's time to get into gold. You would have got in right there and you'd still be in it. It has not given a reverse signal yet.
All right. Well, what do you? We got some big names earnings coming out next week. Actually, I haven't looked yet which ones, but I think a couple of the big boys are reporting.
Yeah, let's take a look. So here's upcoming earnings. We can look at S&P 100. So these are the ones that are coming up. So this is by date right here. We could look at the NASDAQ 100. Look at more of the technology names.
Yeah, so look at Tesla. It'd be interesting to look at Tesla.
Tesla's right here, the 23rd. What else? Honeywell. There's a semi. Cadence. PayPal's coming up. AMD on the 29th. Google,
AMD.
the 29th.
Yeah.
Supermicro on the 29th.
What does Google look like going into this? There's a lot of breakup rumors. Looks like the DOJ is going after them.
Yeah, Google actually has been underperforming.
Yeah.
So there's Google. It's below all of its major support levels or resistance levels.
Okay.
So it tried to break out right here and ran into resistance right here, and now it's starting to go back down. You can see up here earnings is on the 29th.
Yep.
It's in the internet group right there. So communication services sector and the internet industry group.
Yeah. Okay. How about Tesla?
Tesla had been doing great, and now it's pulling back. It's right in this neutral zone right now. It's below its 50-day moving average. It's above the 200. So it's sitting in a neutral zone. trying to make up its mind which way to go. It reports on the 23rd.
Yep. Okay.
So that is going to be a very important one on the 23rd. If we look at Netflix, that reported last week, Netflix blasted through all of its resistance lines.
Yeah, they added about 1 million more subs than or subscribers than they had anticipated.
Yep. So it's now at all-time highs. And I was talking to somebody yesterday. They were like, "Yeah, I was thinking about buying some more Tesla last week, but my financial advisor talked me out of it." She said, "But I just go by what I see people doing, what I'm doing. I mean, everybody's staying home watching Netflix, and there's all these international movies on there, which is something I've noticed too. I mean, they're all subtitled, so you can read the subtitles, but they're foreign language movies. So that's opening up Netflix to the whole world."
Right. Yeah.
So,
well, let's also look at Apple. Apple obviously is going to be an important earnings. Their new phone release, AI enabled or whatever it is. So it's going to be interesting.
Yep. Apple is sitting right at resistance, right there.
Got it. Okay.
Right exactly at resistance. And
they report
on the 31st.
Oh, so it's next week. Okay. Or the week after.
Halloween day.
Nice. Okay.
So I would expect that Apple probably will break out, but between now and earnings, it could pull back a little bit.
Okay.
Because again, because of uncertainty and that type of thing.
Again, it's good to know that the election is almost here. It's almost behind us. We've got 2 weeks or so till we get there.
Yeah, let's take a look because I haven't looked at this lately, but the unemployment claims, because two things coming up, and you can see they actually were higher. This is interesting. Mm-hmm. They were actually higher, but lower than the previous week.
Yeah, well, we had 2 weeks ago, we had a big spike to 255 or 257, something
right.
like that. And I was nervous. It was going higher. It came down pretty substantially this week to like 240.
But it actually, this is the first time I've looked at this. It actually, it has a green bar, which means it was lower than the previous week.
Correct.
However,
the trend is up a little.
Yeah, you see all these green bars in through here.
Yeah.
See how they're going lower? Even the red bars are going lower. Mm-hmm. So red just means it's higher than the previous week.
Yeah. Right.
Right. Mm-hmm. Green means it's lower than the previous week. But all of these are lower. Even the red ones are going lower.
Yeah, they were lower. Yeah,
and that was basically for 2 months.
Correct.
So that was this unemployment rate, 4.3 to 4.2. Mm-hmm. And then the next month right here was 4.2 to 4.1 right there. Even though it was lower than the previous week up here and it's got a green bar, it's well above trend. Above trend.
Yeah, well, there's going to be some noise in that number. Obviously, the country suffered 2 nasty hurricanes.
That doesn't matter.
What do you mean it doesn't matter?
This is just the data.
Well, it explains.
You can't justify the data.
I'm not trying to justify the data. The data is what it is.
Let's look at this from an emotional standpoint. When the unemployment rate comes out, which I haven't looked, the first is on a Friday, and sometimes when the first is on a Friday,
it'll probably be
they wait another week.
Right.
If they wait another week, it'll be after the election.
Ooh,
which would be interesting.
Yeah. I don't know.
And just before the next Fed.
I'll see if I can look that up right now.
Just before the next Fed meeting. But this is what I look at to see what I think the unemployment rate is going to do.
Got it.
And when I saw these going down 2 months in a row, I kept saying that the unemployment rate is going to go down, which it did. Right. But now it's significantly higher.
It is coming out on the 1st. It's coming out November 1st.
Okay, so that's next Friday, week from this Friday.
Correct.
So November 1st, we're going to get 2 more readings, right?
2 more weekly readings, correct.
2 more weekly readings. So there'll be 2 more bars added to this chart. So we'll continue to watch this. But if this trend, and I think this trend will continue higher because of the hurricanes.
Mm-hmm. I think unemployment's going up.
I think the unemployment rate is going to go up.
Oh, I agree. Yep.
On that November 1st reading. it will at least go back to 4.2, and it could go all the way back to 4.3.
And then we get a 50 basis point cut on Wednesday.
Do we though?
I don't know. I've been listening to every Fed speech, and there's been 8 to 10 of them each week the last 2 weeks, and all of them want to go lower, maybe except Michelle Bowman.
Yeah, I definitely think they're going lower.
Yeah,
I'm not convinced they're going to go 50 though.
No, so again, I think the betting market is 89% for a quarter, and actually 11 for 0. So there is nobody betting currently on a 50. What I popped off and said they go 50 is if we go from 4.1 to 4.3.
Oh yeah,
that was where the Fed's going to look at that and go, oh no, because everybody's saying they're nervous about the market, they're nervous about the job market,
Right.
If we go up 2/10, we could get a 50.
Right. And then right after that, we've got CPI the week after that.
Yeah.
Now the Fed meeting will be before the CPI number.
Correct.
Right. And look at the little one that's dropping off this time.
Yeah.
So we're going to get worse. The numbers will be worse for unemployment. The unemployment rate will go up, and it might be worse for inflation.
Yeah, the CPI reading could go up. Yeah, absolutely.
Right. CPI could go up as well.
Yes.
So what does the Fed do? What is the Fed?
Well, again, the Fed has the luxury of the Fed this time is CPI is after the Fed meeting. So the only number they're going to have is the unemployment. And if the unemployment spikes to 4.3 or heaven forbid 4.4, they're going to half. They just will.
They might. But, the Fed sees these things too.
Yeah.
The Fed sees that, this isn't exclusive to us. The Fed has these charts as well.
Yeah.
So they know even though they won't have the actual number, they'll have a pretty good idea of what direction that number is going to go.
Yeah, I couldn't agree more. Well, again, folks, if you want to get this and more, do yourself a favor. Check out breakpointtrading.net. He puts out a newsletter each week, which is must read. Again, Dan, you are amazing. Take care. Have a good week.
Sounds good. See ya.